All right, welcome to Behind the Leads. I'm Jimmy with Banking Bridge. We have Trey Rock with SimpLend Mortgage. He has a long career, although he looks young. He's got a long career in the mortgage industry. We're going to talk a little bit about that. Trey, thanks for coming in.
Of course, I'm happy to be here.
I appreciate it. Would love to kind of start at the very beginning. It's always fun to hear, where did you grow up?
Yeah, so we're based in Philly, but I am not from Philly. I am from the absolute middle of nowhere. I mean, we're talking cornfields as far as the eye can see, central Illinois. I grew up Decatur, Illinois. It was an industrial town. We had lots of factories. That was the corporate headquarters for, big names like ADM, the Staley Company, which became Tate and Lyle, Firestone, Caterpillar, like all of those had huge factories there, and kind of the gig up until 2008 and the crash, which is when I graduated high school, was you could graduate high school, you get a job at one of those companies, and then you would be set for life.
Mhm.
Standard of living's the cost of living, I should say, is really low. You can easily live almost like a king at 50, 60, 70,000, but 2008 hit, and I've always been somebody who I hate being just like fenced in to one little thing. So I ended up going to undergrad. I did like a general Bachelor of Arts in production. I joke around a lot, like it was great, but it was like completely, not business related at all. But it was great
Mhm.
because I met my wife, which is
Mhm.
which is awesome. And then around that time, my wife had 2 extra years. That was around 2012. My wife had 2 extra years. I was like, man, the during this entire time, you had the crash, you had, all of the bailouts, you had all of that going on, and so I was like, some of the news was super interesting to me.
Mhm.
And I'm one of the things that everybody will tell you is I'm just this massive nerd when it comes to reading everything. If I write like I'm crazy, I read like I'm crazy, and so that's something that I was super fascinated with, and I was like, you know what? Let's see if they'll accept me to the Masters of Business program. Let's just try. Let's just try. And then that gives me the opportunity to be around for 2 more years. My girlfriend at the time, now my wife, she still had 2 more years. Let's see what we can do because I mean, frankly, there weren't many job options coming out
Mhm.
of the crash. There wasn't, unemployment was super high. I was like, let me ride this out. So I did that. I got in. I got an assistantship, which was great. Did my master's of business. Did really well there. I did better than I expected. I did not expect that I was going to do so well, and I did pretty well. And I was like, all right, well, what do we do? And it was around that time that you had the whole Blagojevich thing going on, and then
Yeah,
you had,
yeah.
3 years of Illinois didn't even have a budget. And my kind of shtick at that time was that I would write grants for institutions, nonprofits, and I would write my fee into it, and I would make, a good enough money for the Midwest and being in the middle of nowhere to live off of that. But without an Illinois budget for 3+ years,
Oh.
there was no money for that. So I was like, all right, I talked to Samantha, my wife, and I was like, let's go to the East Coast. We've always wanted to go to the East Coast. And that's kind of been like our dream. She's a super talented seamstress and tailor. And that was kind of one of the things that paid for groceries when I was in grad school. The assistantship paid for rent, she paid
Uh-huh.
for groceries. And so from there, I just started applying everywhere between Boston and Washington, D.C. that was even remotely financial related. Like if it was finance related and I could use my degree, and that was going to be the thing. And her dad was great. He's like, I'll help you move. I believe in you completely. Let's do it. And so I started applying, and they had this really great graduate development program that they still have. It's gone through a couple name changes at Freedom Mortgage. And I applied there, did the interview. It sounded like, a really awesome opportunity because one of the big things with me is I've always wanted to like work hard and be rewarded for that work. Grant
Mhm.
writing, if you work hard, you make more. And not that money's a thing, but just, like I like the ability like that, that work and reward, that
Mhm.
it's not just you're stuck somewhere and you're getting a salary and whatever, no matter how much you put into it. It's like you work harder, you benefit from it. That's always been a big thing with me. So I got hired at Freedom. That was right around the time that TRID was taking place. So a lot of my initial training was all on, the GFE and the HUD
Hmm.
one and all that. And then the month before I tested, they switched to TRID. So I had to relearn everything, which actually was kind of fun because it gives me like now it gives me a really good opportunity to speak with, your title companies that
Hmm.
even today, it's been, what, 8 years? Even today, they don't quite grasp TRID. So stuff like that. So it gives me the ability to translate that. But I was at Freedom. I did the graduate, program where it's a rotational program where you spend time in processing, you spend time in operations, you spend time, doing like really develop sales training, and that was invaluable to me. It's funny now that I've got my own place, how much I look back
Yeah.
at that training I got right then that helps me now developing all of our items. But I did really well. I was consistently among some of the top loan officers at Freedom. My first loans were, FHA streamlines, VA IRRRLs, which is funny
What
because
year? What year is this? Like, when
that
did
was
you
that
start?
was 2016.
Okay. So it's
It
starting to
was
heat up a little bit. Things are starting to
Yeah,
heat up a
yeah,
little
right
bit.
there. I
Yeah.
remember like I hit the sales floor and it was right when the UK was like, "Hey, we're leaving the European Union."
Hmm.
And there was just that bunch of like
Right.
the
Refi boom, a
waves
little
it was
boom.
making
Yeah.
in the
Yeah.
financial world. So I did that, and it's funny because all my training was in FHA Streamline and it
Hmm.
was in VA IRRRLs, but my first loan was a multi-unit refinance of a conventional loan. And there was a language barrier. And so I remember because
You're super excited. You're like, I
yeah,
got the
super.
person.
Yeah, and then just reality just punches you in the face. And so
Yeah.
I remember trying to click on my screen and I was outside of my wheelhouse already. And then on top of
Uh-huh.
it, super outside of my wheelhouse. But I was like, you know what, I'm gonna take this. But I remember my hand was shaking so bad on the mouse that I like had to like hold it and click. And so that was a lot of fun. But I mean, we did a great job there. We had a great group of people, friends that I'm still friends with to this
Yeah.
day, that I'm consistently like, hey, if you want to leave retail, let me know. I think you would be a great fit. If you want to leave retail, like I'm just
Right.
consistently hitting them up. But we did a great job there. And that was when things were heating up. And I remember there was a point they came out and they were, like everybody gets this rate, no matter what the LLPAs are. We're losing money on some, we're making money on others. Just everybody gets this rate, and that was such a fun time to just cut your
Hmm.
teeth in the industry
Hmm.
because it wasn't like shooting fish in a barrel like it was a few years later, but it was still pretty good, and you got a
Hmm.
lot of reps that set you up really well.
Hmm.
And from there, I started wanting to like train loan officers and I wanted to be involved with a lot of that. And so they hit me up and they said, hey, why don't you spend a year training the graduate program people that the program that you came out of? And I'd done, some like, hey, this is what the millennial loan officer looks like talks at
Hmm.
Freedom to their leadership. And that's kind of what put me on the radar there. So I did that. And I was like, I'd love to train people because, I can speak that language because nothing against them. At that time, the general loan officer was like 50s,
Hmm.
different generations. Some of them are great. Some of them are still around. I don't knock them. But what
Hmm.
what happened was there's a little bit of a language barrier there,
Hmm.
so I was able to use that to my advantage and be like, hey guys, I just came from this program. These are some of the things that was beneficial to me learning and how you can do that as
Hmm.
well. And so
Hmm.
it was at that point I did that for about a year. And then, Garden State hit me up and they were like, hey, we're regional. We're looking to ramp up. We want somebody to eventually take over for our sales team. You seem like the right fit. Would you like to
Hmm.
do that? And I interviewed. And it's funny, I initially turned it down because I was going from that like corporate mentality to that
Yeah.
like edge of the sword, tip of the spear mentality.
Hmm.
And that was really scary to me. I also had some like family issues going on. I didn't know if I wanted to commit. And I didn't want to I didn't want to let somebody down.
Hmm.
But then, after a few months, I came back to him and I was like, you know what, I'm ready to make the jump. Let's do it. And we did. And I love the Garden State people. I mean, they're some of the best because where I got, the really good corporate training and like this is
Hmm.
what a company looks like, and all that I got from Freedom. But then I got that aspect of like these are what the cool kids are doing. Like
Yeah.
this is what,
Right.
Garden,
Outside the other group
yeah,
that you never get to see. Yeah.
yeah.
Right.
And so that was great. And I mean, that
Right.
was during the time where it was just, you're just writing loans left and
Hmm.
right. You're just, as much time as you want to spend, that's the loans you're going to get.
Yeah.
That's where you spend a lot of
Hey,
time.
let me ask you this because
Sure.
the freedom mortgage thing I thought was pretty cool.
Yeah.
You get it, so you get there and you're signing up for a graduate program.
Hmm.
Is it a bunch of new LOs or is it just like a select few graduate degree people? Like, that's an
It
interesting
was,
like
it was a,
idea.
it was a bunch of LOs. So it was a bunch of
Okay,
people with bachelor's and graduate degrees, and
got it,
they would have like an LO track. They would have, an underwriter track
got
later
it.
on. And it's like it's a really good farming system.
And
And
so that's a year. Like you have different,
yeah,
or is it
you
six
have
months?
it's a year. You have, at the time it was a year. I don't know what it's like now. Obviously it's been a while, but
Yeah.
at the time it was a year, and you had like specific metrics you had to hit, and then you're let loose as a highly effective loan officer.
Do you
So
remember, was it salary plus commission or was it just all salary for that period
it
of
was
time
a
or was it?
salary plus like performance bonus for that first
Okay.
year. Hmm.
Okay.
And
And,
then go ahead.
and then when you get released, they say,
Hmm.
okay, Trey, you're here. We're going to put you in this group. This is the
Yeah.
government stream FHAVA.
Yeah.
You're going to be an expert.
Yeah. Yeah.
Okay.
That's exactly what they did. And then diving more into the minutia of how I was positioned was I did that for a little bit, but then they had, these teams of like people who were getting the concepts, and they would be like a rotational team. So like if this
Okay.
team needs help, you would go and write conventionals for
Got it.
whatever, however long you
Got
needed,
it.
and you would go and do, govy or purchase. And one of the best sales leaders I ever had was during that time. And I remember the one thing that I didn't have a ton of experience with at that time, it was purchase. And I raised that like, hey, I don't know how to do a purchase, and I'm this like full-time loan officer, and I personally at that time I think that if you're a good loan officer, you
Yeah.
need to know how to do everything. And he was like, that's a great point. He was buying a house right there, and he literally, and I'm not even kidding you, he pulls out the contract and he goes, this is my contract, read it and get back to me by the end of the day and tell me all the stipulations. And I was like, are you kidding me? I was like, this is your personal info. Like, I don't have to look. And he goes, no, tell me. And that was, and he would quiz me at the end of the day. Shout out to Mike Cronin, one of the best sales leaders I've
Wow.
had in my life. Yeah.
It's funny how that is. Like I remember
Yeah.
I was a loan officer for 15 years and I remember my early time, first loans, they all went, were always just, it was my best friend.
Yeah.
The loan went sideways. It was
Mhm.
terrible, but
Yeah.
everybody has those funny stories. But I
Hmm.
always remember sitting outside of like the top performer and just being able to listen to
Yeah.
how they talk on the phone. Did you have a lot of that because it was call center based and y'all are all kind of out there together? Did you have a lot of like, oh, this guy's saying it this way? That sounds pretty
Hmm.
good.
That was something that was a really good, it was a really good mantra that they gave us in during training, was that if somebody else is doing something that's
Hmm.
really like doing well, steal it. They're not
Hmm.
going to get angry. Everybody wants to, succeed. You want everybody to succeed. If somebody like has this pitch, or the way that they position these, the numbers that makes it easier for the client to understand,
Hmm.
do that. Like
Hmm.
steal it. And I'm a huge proponent of listening to calls. As much as everybody hates the sound of their own voice, and I am absolutely one of those people, but like listening to your calls, and because there's things you pick up, there's things that the
Hmm.
client's stating, and this is something that I pitch all the time with the team at SimpLend is, when you listen back, you're able to pick something up, and you have to detect the difference between what the client's saying, what the client's needing, and potentially what the client wants.
Hmm.
And that's a super important thing, that stealing the good stuff from other people, that's not really
Hmm.
stealing, you're all helping each other out. That's how you get down to be better at that. So
Hmm. So Garden State
mhm.
is at the time is a small team. Like, is it because it grew obviously, but what was it like when you joined?
Yeah, when I joined, I think it was, and I could be slightly off here, but when I joined, I think it was something along the lines of, I think it was like 20 to 25 people, something like that. And
Total.
then
That's
it grew.
everybody.
That's everybody in
Yeah.
the whole company. And then it grew to be, I think it was at the highest, it was like 75, 80.
Yeah.
I'm going to say something like that. I knew that when, one of the big things we were discussing in our goals and when I first joined, and I'm a huge person of like, what are your goals? Like forcing
Hmm.
people to tell me what their goals are. But I think one of the big things was like, hey, we want to get to 50 employees by the end of the year. I can't remember which year that was, but one of those years it was like we want to be at 50. And then, towards the end there it was like 70, 80, and we're like, all right, we're doing great. Like
Hmm.
that's good. So,
And so they hire you to lead a team. Is that what they're
yeah.
doing?
So, yeah, the way they had it split up was they had the React team, the realtor team, and they were great, and they handled a lot of like the realtor and the referral business, and then they had kind of the consumer direct model, kind of like you say the name consumer direct, but it's really not necessarily consumer direct, but then also it is consumer direct. But anyways, they had a consumer direct model where it was lead buys, online
Hmm.
lead purchases. Primarily through Bankrate, and then later became Banking Bridge, and we would do a lot of those and we would get them into our Salesforce system. And the entire goal was, reach out to them as quick as possible because everybody's going to be trying to do that. And that's unfortunately gotten worse.
Yeah.
But everybody's going to be trying to contact them and make the connection. Like the thing that Garden State, and this is the thing that I hope to build with SimpLend, and I think we're doing so now, is that they had such great reviews because it's an
Mm-hmm.
actual person on the other side
Hmm.
of your phone. As you scale, you unfortunately run the risk of losing some of the personability you have with the person you talk to.
Hmm.
And that's something that Garden State never had as a problem. They were
Hmm.
always, when you got on the phone with them or you text them or you email them, it's a real person who cares about
Hmm.
you. You're not a loan number. And that was the big thing. And we needed to get in before everybody else to prove that that's exactly who we were.
Hmm.
And that was something that they delivered in droves. And I think that SimpLend delivers in droves as well now.
Yeah.
Is that,
So.
it's not some person in a call center, nothing against people in
Hmm.
call centers. Those are real people too. But it's somebody that, lives and breathes mortgages. They're an expert in their field and
Hmm.
they know what they're doing.
Yeah. It's so true that the differentiator can be rate in this business, but
Yeah.
even if you're all pushing a low rate, it really is the connection that the loan officer has with that person. It's usually the first 30 seconds
Yeah.
that you get to speak with them or interact with them on text or email.
Hmm.
That can at least get you in the ball, like one of the
Yeah.
three or one of the two lenders, and that's so
Hmm.
important. And then, like you mentioned, reviews. I think a lot of our customers are just starting to learn the value, the importance of reviews because
Yeah.
everybody's so trained. When you go on Amazon, if you're interested in this product, well, what are people saying about this product?
Yeah.
Your business is no different. So it's good. It's good to hear you doing that. But so when you start to get on board and you're starting to ramp up bank rate,
Hmm.
it's expensive.
Yeah.
And this is your first attempt. You probably just get to look behind the curtain and see how much money people spend on leads, and you're like, oh my god.
Yeah.
So, what were your thoughts? Like, were you nervous? Like, did you feel like it was not working? Like when you first started with Bankrate, or was it always working?
So they had Bankrate before me, and one of the things that I came in was I drove a lot of metrics as far as like let's prove that these are working. Like let's get
Mm-hmm.
down to the nitty gritty. And something that I always said, or like I said earlier, I'm big on work hard and get the reward and everything like that. But I'm also just extremely analytical. So I feel uncomfortable personally if I do anything and I don't know what the numbers are.
Mm-hmm.
It like is a point of my eternal anxiety if it's like, hey, we just spent, and they were spending big money. And
Mm-hmm.
that's the thing that it was I think it was I'm sure it was right there equal to payroll as far as
Mm-hmm.
overhead. And so that's something that you really wanted to drive and dial into the numbers like is this worth it?
Mm-hmm.
And the good news is it was worth it at the time. I mean, but the question being, as we are in today's higher rate environment, is it still worth it?
Yeah.
And that's something that if you really know your metrics and your numbers, then you can answer that question. And that's the big thing that I worked towards was, okay, how do we get the cost from bank rate on a per lead basis?
Hmm.
How do we get it to register in Salesforce in the beginning when it wasn't quite as developed as far as that, connection? And then what are we looking at as like, we knew our cost per funded loan, but like, do we need to like what's our average lead cost? What's our pull through? Like if we
Hmm.
spend X, can we reasonably expect Y, or is there a
Hmm.
variance? And that was a big undertaking that I spent several years like driving into, and at scale it's definitely there, but for a smaller company, that's not necessarily the way to go, if that makes sense.
Totally. And that's with that type of commitment when if you're working with a bank like rate type platform, it is a big commitment and you
Yeah,
do have to understand the numbers to see if it's going to work because if it doesn't and you miss a month, it
yeah,
can put you not out of business, but it can put you way back.
yeah,
Um, and it's probably a really good lesson that you learned early. It's cool that you get to, you get the loan officer, you kind of like, it's like, McDonald's, you're in the back, you're flipping burgers, you're putting the cheese on the burger, you're putting
yeah,
the ketchup, and then you're,
yeah.
you're moving up and
Mhm.
learning on the lead buy side. And I always, because Guard State was one of our first customers and was really the one that pushed us into like heavy CRM integrations, and you
Yeah.
guys leaned heavily into the CRM. Was that your first like really experience in deep into a CRM, or did you do a lot of that in Freedom as well?
No, that was my first experience into a CRM. Freedom, when I was there, they had a proprietary CRM. I think they've changed since then, but they had like, their LOS and their CRM was all proprietary, which,
Mm.
I remember clicking on it and it was like, all right, is this the 90s? Like this is, but no, that was the big foray, and I do remember, and that was kind of, and we'll get into
Was that
this
a
in a
learning
minute.
curve, a big learning curve to
Yeah,
figure that
well, and
out?
it was kind of my first foray into like, how do we take this into the 21st century and kind of,
Hmm.
I mean, frankly, and everybody throws this word around a lot, but like revolutionize like what lending looks like now.
Hmm.
And that was kind of my first taste, which developed into, SimpLend and how we go about that. And so yeah, that was definitely a learning curve, but
Hmm.
well worth it.
Hmm. So when you would wake up in the morning as a leader of the direct consumer sales team, right?
Yeah.
So you led that team. Do you remember the first thing you looked at? Like when you opened your computer, what was the metric or what was the
Oh,
information that you like for
first.
me, for example, I'll give you an example. Like
Uh-huh.
I open up my computer in the morning, first thing I do is to look at how many leads did we do yesterday?
Yeah.
And then I look through the quality of those leads. What would be something that you like look at every day?
So a lot of it would depend. In the beginning, before things went like haywire in
Hmm.
2020 and 2021, I was doing a lot of tracking as far as like, what does the 10-year look like? What's our long term, like how does that play into our long term? I would religiously do a weekly sales meeting with like set metrics. And so I was always
Mm.
watching those metrics to keep the team going. So that's how I would look at it in the beginning. Towards the middle and the end, as we were, adapting our like, lead strategy and overnight buys, because sometimes overnight leads, not only
Hmm.
are they cheaper,
Hmm.
but they can be a better quality.
Hmm.
And so that was, like, okay, I stopped paying attention around 9:30 p.m. last night. It's 7 a.m. What did we spend last night?
Hmm.
Because you're wanting to manage that budget, but you also want to know, like, not only from a money perspective, but like, what do I have to take care of my team in the morning? Am
Yeah.
I going to have to get more aggressive when I get in and I get situated and 9:30-ish rolls around, or 10 and rate sheets hit and pricing updates? Do I need to get super aggressive, or do we have plenty and maybe I just don't turn on leads in the morning because we've
Hmm.
got plenty here that we've got to work through, and if I buy more, I might be wasting some of my money that I
Hmm.
need to spend towards, maybe buying leads tomorrow. or something
Hmm.
like that. So that's a lot of how I would look at that as it progressed.
So you managed the relationship between Garden State and Bankrate.
I
You did
did.
all that.
Hmm.
What would you, if someone is in that relationship right now, do you have any advice that you learned with dealing with someone like Bankrate or some of these other
Yeah.
people? Was it cordial? Did you how was that
So
most of the time?
we lucked out. A lot of our account reps were very good people. It
Hmm.
is cordial. However, there are obviously disagreements you have. The big one is, the ability to return leads that shouldn't have
Hmm.
got through is always something that is
Hot
testy.
potato. It's like hot
Yeah.
potato.
Yeah, that's always a testy, conversation to have where it's like, hey, over the past month, we've spent X amount and
Hmm.
gotten these leads, and they like we have no data. We've got no email, we've got no phone number, we can't find them when we try and look them up. That's always testy. But the big thing when you're managing that relationship, and this is something that I generally do across the board, is if I'm going to make an accusation, not that it's an accusation, but you get what I'm saying. Like if
Hmm.
I'm going to make something like that, I always provide the numbers to back them
Hmm.
up. And that's something that, especially dealing with them and a lot of the big lead aggregators is like they're not going to reply without something to back up your claims.
Yeah.
Or
Yeah.
you might get like platitudes, professional platitudes, but platitudes,
Hmm.
unless you have like, hey, this is the exact thing that I am talking about. Here's
Hmm.
this proof. Here's how many instances. Here's the timestamps. Here's the lead IDs. Whatever you have, like that's the thing that you've got to produce with them. But a relationship is always a relationship. I mean, they were great. I mean, they still, some of the people at Red Ventures who own Bankrate, that I'm still, good friends with them. I
Hmm.
still talk to them from time to time. That's something that when I started SimpLend, they were some of the first people to congratulate me.
Hmm.
So that's something that they do as well. So it's definitely a relationship, and like every relationship, there's peaks and valleys. So
Yeah, it is funny how these, like, especially these lead providers, they know a lot about the industry. They know who's who. They know what's
yeah,
going on. So I've always felt like it's great to have as good a relationship with those people as you can, your account managers,
yeah,
because they'll save you
oh yeah,
when if you can treat them right 99% of the time, and there's that 1 or 2% where you got to go back to them, they
yeah.
definitely will. And sometimes you get a lot more with honey than
Oh, for
vinegar
sure.
for
Yeah.
these for some of these groups. So you're in. It's say it's 2020. It's rates are as good as they're going to get. You've got a lot of business. You guys are growing. Um, when did you feel like things shift? Was there like a shift when you thought, "Oh man, this is rates are coming up, things are slowing down," or was there a time in whatever that is, 2022, 2023? You're like, things are starting to change a little bit.
Yeah, you kind of felt that a little bit in 2022. That
Yeah.
that was when I really like it's funny. It was almost like exactly into 2022. Although there were hints beforehand for sure. But 2022 was when the shift really happened.
Hmm. Did you feel like, well, because we talked to customers about lead buying.
Mhm.
Do you feel like when you are buying leads, did you go too long? Did you feel like you were able to cut it off because you're how did you look at that period?
Yeah, I think so. When I was at Garden State, a lot of it was like looking month to month.
Hmm.
But then a lot of it, as 22 came around, it became less of like, let's get them in and we can solicit them from a macro perspective. And it started becoming much more individualistic. But with Garden State, the individualistic aspect was always there.
Hmm.
But that's kind of the best sort of, indicator there is like we would spend the money if the money was there, but we would make sure that we're tailoring it on a much more buy loan scenario.
Hmm.
So a big thing as far as a game changer at that time, that if I recall correctly, was right around when Home Ready and Home Possible started waiving LLPAs. that was a big deal because then we were able to retool how we, beforehand it was like, we would hit up purchases, but if they were over 90, the likelihood
Mm.
of conversion of that loan was particularly slim, not through any factor, but just because there were bidding wars. And if you only had 10% down, most of the time you're losing bidding wars. It wasn't some,
Uh,
we want to avoid those people. That's not the case. It was just
right.
that those people generally at that time, because bidding wars were still going on, weren't getting the properties because they weren't able to show an escalation clause or
Got it.
whatever they have when they're trying to get homes. And so when they started waiving the LPAs, that was something that we were able to start really taking advantage of. Like,
Mm.
okay, a 680 is the same as a 740 on the rate. Now your MI is going to be different, but on
Hmm.
the rate, that's the same thing. So we can now kind of set our filters to start getting those people in, and nobody else is doing it because the team at Garden State and is was on top of their regulations. And I've
Hmm.
always been, that bookworm that I mentioned. So everybody else is still figuring it out. We were able to just hit it
Ahead of the curve.
immediately and start soliciting those people. And it was
Yeah,
identifying those types of situations. Yeah.
in there. So when did you first think about I want to because you're relatively what would you say? You had 10 years experience because you started in
Yeah.
2016?
I'm closing in on 10 years. Yeah.
And so you to me, you don't seem like a risk taker, but on paper, if you write down, you've taken risk in your
Yeah.
career.
Yeah.
When did you first think about opening up your own? Was there a time in 2020 or you're
Sure.
like, man, I want to do this myself?
So
When was that and why?
I've always wanted to own my own business, even
Mm.
before I, started in mortgage. I think one of the things that happened was, you always hear the adage like through strife, like that you find your life changes and
Hmm.
everything like that. So in 2023, my wife and I had our daughter, and she was born extremely premature.
Mm.
28 weeks she was born at. And so that was something that your your values in life,
Mm.
obviously when something like that, because my wife had complications, so she was in the hospital. My daughter
Mm.
had complications. I think she was in the NICU for 48 days, in January into February. So that was something that made a huge difference in how I looked at life.
Hmm.
And, I was looking at myself like I'm at a crossroads. I've always wanted to own my own business. I've always wanted to set out on my own, and I'd had access throughout my entire career through luck and hard work. I had access to decision makers,
Hmm.
and I saw how they operated. Whether it was, the middlemen's at Freedom or, through the close relationship between GSHL and UWM, I got to see how Matt operates, or, Justin at Garden State, who I still value as one of the chief, people in my career as far as like trajectory, or a lot of those people like that I was able to see how they were operating and see how they built their businesses. And I was
Hmm.
like, I can be that. Most people, and I always joke around like, here I am turning 35 this year, and I have the job of like somebody that's in his like, late 40s.
Hmm.
But that was like, life changed, life hits you in the face. What am I waiting around and doing? Like,
Hmm.
I'm really good at loans. I know the seller's guides. I know how to finagle my way through the corporate, like, red tape through multiple different times in my career. I was like, let's make the jump. And whereas other people were like, rates are the highest they've ever been. Nobody's writing business. You shouldn't do that. And I was like, well, I'm not going to be missing out on much production if I do it now.
Hmm.
And that's what we did.
Did you talk to like Justin or anybody? Did you go to them and say,
Yeah.
"Hey, I want to do my own thing"? Did they give you advice? Like, did they give you a
Yeah.
genuine, "Hey, here's what you should do"? Or
Yeah, and I hold the highest regard to Justin. Like
hmm.
he was one of the few, like he was one of the people that like, obviously the conversation's never going to be a good
Yeah.
conversation to have, but that's something that even afterwards he was like, hey man, like we hear about all these people that want to set up their own business, and you went out and you were the one who did it.
Mm-hmm.
And that was, like that's a huge compliment to me.
Mm-hmm.
That was a big deal for me, is like, hey, and don't get me wrong, starting your own business is excruciatingly difficult. And I know
Mm-hmm.
you know that, but that's something that, having those moments, or, even today, like having the moment of like, I can make this decision and I don't have to go through 12 steps of approval. Not that Garden
Yeah.
State was never that way.
Yes.
Freedom was that way a little bit. Most bigger corporate companies are like that.
Right.
But that's something that I don't take for granted. And actually having those conversations help keep me grounded a little bit. Not that I
Mm-hmm.
have a ton of problem with that, but like they keep you grounded, and then they also make it to where you're grateful for
Yeah.
everything you've been able to accomplish. So
So were you able to did you have to completely separate from Garden State before you started the process, or were you able to kind of do a little bit of both?
I did
Because
a
it
little
does
bit
take
of both.
time.
Yeah, it takes time. And I made it readily clear that like I'm here. I
Hmm.
wrote, I think it was like a 55-page manual on like this is how you do bank rate. Like
Hmm.
this is what you
Wow.
do to really like set yourself up to, like win on the tables, to edge other people out while still staying compliant, to, like this is the systems and the screenshots of like the systems. Here's my I went overboard on this, but here's my 28 tiers of pricing scenarios that I go through, and my, how I target each individual area to make sure that we're the most competitive. But here's this safeguard to make sure that we're not, what's the phrase? Disparate impact. We don't have accidental disparate
Yeah.
impact, and stuff like that. So that was, I left them that. I made sure that like, you have everything I do listed. You've
Yeah.
got it all. You've got a 55-page document. I am still available if you have any questions. And that was how I managed that kind of transition into
So
owner.
you start Simplin. Is the plan to just say, "Hey, honey, I'm going to do this. We have this reason I want to do this now." Is it just you? Do you have a processor? Do you just say, "I'm going to walk us through that"?
Yeah, so the team at SimpLend right now, as we stand right now, it started out with just me because we knew that there were going to be, and I've got a business partner, but we were going to have about 6 to 8 months of just paperwork,
Yeah.
of just tons and tons and tons of paperwork. Luckily, I'm relatively good at paperwork, so I knew that once we get past that point, we
The guy that can file grants.
yeah,
He is the
exactly. Like
person you
since the,
need in
since the
mortgage.
beginning, that's
Yes.
exactly right. And so we filed the paperwork, we got everything set up, we got that going, and then roughly June of 2024, that's when we were really, let's bring on maybe a couple loan officers, and I'll process everything until we get to, once again, setting the metrics. Like
Hmm.
at that point, we had Pennsylvania and we had Florida, and we were applying for Texas that we have now. And I was like, I can handle processing these loans and selling when I need to sell, but I want to get some loan officers to like really like, if I'm bogged down in paperwork and processing, the key, like we talked about, is get that lead immediately. And if I'm bogged down
Hmm.
with those things, that's a roadblock. So it's like, all right, let's bring in some loan officers, and they hit them up immediately, and let's bring in a loan officer assistant once we really, when rates got pretty good around July into to August comparatively, nothing like 2021, but the best we've had in recent memory.
Hmm.
And so I did that, and then I started like really developing like, what do we want in a team member? Like, do we want, nothing against people in mortgage, but they've got a lot of habits that SimpLend does not want, or do we need. So
Hmm.
we, as you've seen on our website, we've got you guys, there is no stop to seeing what our rates are. We have a low lender paid comp plan.
Hmm.
What, you hit it, you get it. Like that's, if you meet these metrics, that's what you get. We text, we're set up in Arrive, our quotes go out immediately, you can do all your online
Hmm.
application. Like we're really looking at streamlining it. So I was like, really like, what do we want to look at as team members? And then I'm like, let's try. I have the training experience. I know enough about loans. Let me bring in some people that are completely green to mortgage, and then let's see what they do. And through luckily, and I count myself extremely lucky for this, two of my best friends in college, one of them became an Army Ranger and the other became a Green Beret.
Mm.
And they're both highly decorated veterans. And through their network, I'm able to interact a lot with veterans. And one of the things I do on the side is I'm always available for texting to anybody over general mortgage questions. And I've helped
Mm.
out a lot of those, especially a lot of Rangers with a lot of their mortgage questions. And so I was like, you know what? I bet I could get some veterans in here, especially combat veterans, and I
Mhm.
could show them the ropes. And I think that they're going to be able to do better for what we are as a company. Once again, nothing against people in mortgage,
Mhm.
but do better for what we're positioning ourselves as a company. And so that's what I started doing. So I've got, my roommate in college that I mentioned who became an Army Ranger and he's been combat deployed twice. He now runs my operations team.
Wow.
And I've got another acquaintance who was looking for a job, and he hit me up, and he's a combat veteran. Um, and he wanted to become a loan officer. And the thing that I really liked about him was I was like, hey, this is what you need to do to become a loan officer. We never once talked about me hiring him. We never talked about anything.
He
Just me
comes
giving
back
him,
and says, here it
yeah,
is.
he comes back. He's like, all right, I passed my test. I was like, wait, what? He's like, when do I start? And I was like, we never talked about me hiring you, but I love it.
Sure.
Yes, come on in. Like, let's do it.
That's great.
So
That's
that's
great.
that's the big thing that we've got.
So,
And
so it sounds like you did sales first. So you dove in, you put the investment into hiring sales team, less
yeah,
into processing, and then you
yeah,
took the burden of processing and
yep,
doing all that stuff.
mm-hmm,
Got it. And you would
yeah,
advise. I mean, that seems to be a good. If you're opening up your own, thinking about opening, always you would say invest in sales first. The
yeah,
owner has to wear a million hats anyways.
mm-hmm,
You might as well be the processor
yeah,
as well.
yeah. And we have it. I literally I charted it out. I was like, how many loans can I handle processing
Yeah.
without losing all my hair? And
Yeah.
and I realized I was like, okay, I can roughly do 10 to 15, depending on complexity per month,
Hmm.
without really, like, of course, you're going to be spending 12, 14, 16-hour days, but without like really losing my sanity, that's where I
Hmm.
could be. So let's get the company to that point, and then we can hire somebody in
Yeah.
operations and processing. And
Yeah.
that's what we did. So
Yeah. It's interesting that you guys started, that you made that point where the good news is I'm opening up my shop, my brokerage now, whether you were at Freedom, Garden State, or where you are now, business, there was just not that much business.
yeah,
So you might as well open up your own thing while it's slow so that you can
hmm,
have everything ready
yeah,
and to rock and roll when it comes back, which it feels like it's slowly starting
yeah.
to do that. As we close here, I could ask this question. What do you think makes a good loan officer?
Oh man, this is a really good. This is you've just put me on my soapbox because it's probably not what everybody else thinks. So, like I mentioned, super highly analytical. I can turn on
Hmm.
the sales mentality, but I think the thing that makes you in this world. Now, don't get me wrong, even 10 years ago when I started, the top, the best, the person who could best talk to people was the best loan officer. But I think in today's world, you've got to have an analytical mindset. You've got to
Hmm.
be able to go the extra 2 or 3 rounds with your clients to educate them. And everybody always talks about it in sales training. Educate your clients, set expectations. Yes, that's true. But taking it the extra step and then being able to say, this is what you're wanting, that's probably not what you're asking for. Or
Hmm.
disagreements are super important. But I mean, the big thing, and what I'll do sometimes, especially with the team, and I'm like, hey, here's a really good example of how I would approach this client, is I'll BCC on him. Like, hey, see this communication, how I'm doing
Hmm.
this. I had a client last night who she originally she's a referral from somebody who's closing on May 2nd, and our docs are basically out at this point. So we're just putting our feet up. thus our funny AI generated image on social media about it. But he sends us this referral. And and the normal pitch, especially with a low lender paid comp as a broker, is like, hey, I can do this for free and drop you 50 basis points on your rate. It's a no-brainer. Well, then I start talking to her and I realize, she just got a big bonus of 20 something thousand. I can't remember the exact number. And she wants to pay down the principal. She's like, should I do this after we close? I was like, absolutely not. Look at the different options we
Hmm.
can have. And now your free rate refinance is actually, like you're in the best tier now. You're at 65
Hmm.
LTV. You've got great credit. Look at this. Look at your long-term savings. And if
Hmm.
I hadn't have taken the time to both, talk to her and listen at what she's wanting, but also be super analytical and say, hey, I'm going to take an hour and I'm going to generate, like, here's where you're
Hmm.
at. Here's your three options where you're at. Here's how much your interest savings is, which are great, but you want to put 20,000 down. Here's what that looks like. And here are
Hmm.
those three options. And I wrote her probably more than I should have, but I wrote her a book like, this is your monthly savings. This is your break even period. This is how much you save over the life of the loan. And this is how I calculated it.
Hmm.
I hate when a loan officer will say, I'm not going to tell him that. It's like, no, you're
All
like
right.
you're a financial professional.
All right.
You're at the same, you should be holding yourself at the same level as an accountant, as a
Hmm.
lawyer, as all of these things.
Hmm.
So you better explain to the client what's going on, because you know what
Hmm.
happens? They're either going to A, be like, that's too much information, but he knows what he's talking about. I trust him. Or B, they're going to be a much better client. They're going
Hmm.
to understand that you took the time to educate them, and you're going to get every mortgage they will ever do for
That's
the
right.
rest of your life,
That's
period.
right. That's right. That's
So
right. I
that's,
would agree 100%
yeah,
with that.
yeah, that's kind of my
100%.
get down and dirty with the numbers. Don't be afraid of the
Yep.
numbers. Don't be afraid to have the bad conversations. Do them right now. They'll remember that.
Yep. Yep.
Yeah.
Well, Trey, thank you for the time. It was great chatting with you.
Yeah.
You guys are doing awesome. So
Thank you.
we're going to see what things happen for you in the next couple of years,
Oh,
and
yeah.
I'm sure we'll be touching base here soon.
Yep. Absolutely. Big things to come.
Thanks, Trey.
Yeah, of course.
See you.
Mhm.